Hello, thank you for taking your time to watch this. My name's Tom Winand. I own the HomeOwnership Company. I'm a mortgage broker in Salt Lake City. I'm going to show you how a mortgage lending calculator, which is behind the picture and the information about what loan we're going to price, works to price out pricing on a loan for a mortgage. We're going to do a lender paid loan. It's a $500,000 purchase price, 3% down, $15,000 for the down payment. It's a first time home buyer loan, which means you haven't owned a house in the last 3 years. I'm doing that so you can see it's very affordable to do a first time home buyer loan. The loan amount is $485,000 that we're going to be doing today. It's a primary residence, not a condominium, single family dwelling, and it's a 750 middle credit score, so not crazy high credit score for pricing this loan out. Right here, you can see my NMLS numbers for both me and my company there. They'll be in the description, and they'll also be on the website that you came from. This is a mortgage pricing calculator. I've told you most of the information on here, but we're going to price with United Wholesale Mortgage, the #1 lender in the nation. They only do wholesale loans with brokers. They close lightning fast. I've closed 2 loans with them in 7 days, which is legally the fastest you can close a loan because there's 2 waiting periods, one for your loan estimate and one for your closing disclosure. My average time is 12 to 15 days when I do an appraisal. Those other loans didn't have it. The 2 7-day loans didn't have an appraisal. They got appraisal waivers. We're going to talk about a fixed rate loan, a 30-year loan, 30-day pricing. So let's price this loan out. We're going to have 2 loans, the Home One loan and the conforming 30-year fixed loan. We're going to talk about bread and butter. It's also the better priced loan here. You can see here it's a little bit better priced. We'll talk about that in a second. So let's bring that one up and let's move the highlighted area to the middle of the screen and zoom in for you. Get my cursor back. This is pricing. Interest rates starting from this screen 7 to 5.75. The middle highlighted one is the lowest interest rate before you have to pay money or you get paid money. And that is a credit of $325 at 6.375. These are adjustments. This is what I'm talking about adjustments. Now, there could be a lot more adjustments in here. Here's your LLPAs, lender line pricing adjustments. There could be a second home. There could be a non-owner. Could be an 80% loan to value. Yeah, you get an adjustment cost for 80% loan to value because there's no mortgage insurance on it. Could be a condominium. But right now we have one adjustment. It's for FICO score greater than 15 years. So 20, 25, 30 years. 0.5% adjustment cost, but Fannie and Freddie are giving you a net out of that by an adjustment of 0.5%. So your adjustments on this loan are 0. And they're doing that to make sure that lower credit scores don't hurt you in your pricing. Then if you take the 6.375 is 1.0667 credit, take out the 1% that I get compensated for doing your loan. That's my lender paid pricing. So the lender's paying me, and 1% is ridiculously low. Let's talk about pricing. The average mortgage broker is going to be at a 2% lender paid compensation. I'm at 1, ridiculously low. They can go as high as 3% by law, but most of them are right about 2%. There's a couple that are a little better, but not much. And there are some that are higher. I know a bunch that are 2.25%. Banks are around 2.5. Big correspondent lenders, the ones that advertise a lot, are around 2.5. And credit unions are around 2. I know that because I price them out and I compare my pricing to them, and it's just from experience. They do not have to tell you what they make. Brokers do. So brokers, I know what they make. So you add this up, take out my compensation, it's 0.067, which is $325. Now, let's come over here and talk about pricing. It gets a little weird because United Wholesale Mortgage incentivizes us to give you better rates. So 6.25 is a cost of $2,362, but 6.125 only costs you $674. Now you might say, Tom, no, I want 6.25. And I'm going to say, no, you're going to get 6.125. because United Wholesale Mortgage wants you to have that. If you come down here, you'll see the same thing. 6.625 is a $4,176 credit, and 6.75 is a $700 credit. So you're getting this rate. This would be what you would do with me if you need to have your closing costs paid by a credit on the loan. Let's do a little bit more compliance work up here. 6.375 we've been talking about is a 6.805 in APR. You get a credit of $325. It's 1% compensation to me. This closing costs are wrong because it automatically calculates in from today to the end of the month when I click pricing. So it's really about $5,300 in closing costs because you're only going to have a couple of days interest, not like 13 days interest. $167 is the monthly mortgage insurance. Your principal and interest is $3,212. Your principal, interest, tax, and insurance is $3,468. And like I said, you're probably going to get this rate with me, which would then make you a 6.599 APR at 6.125 and a $3,133 principal and interest, $3,386. Why are you going to get that? Well, I get 75 basis points of control your price. So control your price gives me the ability to pay this right here. 75 basis points is equal to 0.75. I spread that over usually 3 loans a month because I like to do 1 to 3 loans a month. And I can easily give you 14 basis points and actually give you 0.25 or 25 basis points. So you'd get a pretty decent credit on 6.125. Same thing would happen down here where you're going to have enough to pay your closing costs at 6.625 with the control your price credit I can give you. Now, this is really important. Remember how I said most people are going to be 1% or 2% comp, 1% higher than me? This loan is 0.861. It is 0.139 less than 1%. If you walk down the street, walk into a mortgage broker, and they're an average mortgage broker, it would cost you $674.15 to do this loan. It would cost you $674.15. With me, you have a credit of $4,176 towards your closing costs, and control your price will make that even bigger. Now, you're saying, Tom, but they just changed their lender pricing. No, lender pricing cannot be changed. It is set. It can only be changed quarterly, and every loan for that lender has to be done at that lender paid pricing. Different loan officers don't have different lender paid pricing. So that's why I'm saying they can't compete with me. It's a math problem. They're going to tell you I can't do it. I'm baiting and switching you. You've seen it. It's a math problem. This is what makes your lending price, this is what changes your rate over here. It's a math problem. 1% on the chart, it's priced in. They're at 2%. They're going to be down here. You're going to get a 6.625 rate. I'm going to be giving you a 6.125 rate. That's just the way it is. That's what makes a difference in your pricing. I'd love to talk to you. Give me a call. I do not put you into marketing campaigns. I do not call you back unless, of course, you say, Tom, call me when they're 5.5. Then I call you when they're 5.5. I hate it when people call and bug me all the time. I'd love to give you a loan estimate, even if you're working with somebody else. Heck, it might save you some money if you give it to them. Or you might come over to me and support the guy that gives the best pricing out there to people. This is the truth about lending. Thank you for listening, and there'll be some more videos you'll want to watch in the resource area. There'll be one about a 1% down program that's income restrictive loan. You have to be 80% of the area median income. I'll show you how to find that out. And there'll be some other videos in there also. Thanks, and have a great day.